What's up, everyone? All right. Let's see. All right, we're on. Let me just. All right. Let me just put this here. Put this here. What's up, everyone? All right. So, for those who are already here, everybody, you can somebody confirm that you can hear me? Just say yes or no. Can you type in yes, no if you can hear me, please? Okay. All right. Awesome. Thank you, guys. All right. So quickly, yesterday I was explaining to you the importance of fundamentals and how you discern how you use the fundamentals to make trading decisions. And one of those trading decisions yesterday was I explained to you why we are not why yet tomorrow why this was Nasdaq. There we go. Why we're not gonna get a trending day, and most breakouts will be false breakouts, and that's exactly what happened. We had a choppy session. Not much has happened. Up, down, down, up. Everybody, people who thought they're gonna get a runner, basically just got disappointed and got stopped out multiple times, right? So we started the day when we were 9 o'clock. Where's 9 o'clock? Right here. We were here, right? So we were here, and I was explaining to you how I remember when this candle popped the highs that the next logical step will be popping these lows, right? And this is exactly what happened. We first stepped out the crowd that was short, then people who went long on thinking that we're gonna get a runner. Where were their stop losses? Their stop losses were below this low or this low, right? And that's exactly what we got. We got a little chop afterwards. Again, stopped out. And then crowd that thought, okay, now we're going to get a shorting market, right? Because this candle at some point was a very bearish looking candle, thinking, okay, now this was a fake out, and this is the this is the real move. And then lo and behold, what happens? We step out. We step out people who are, and again, why am I talking about stepping out people? Because that's where liquidity is. Market is drawn to liquidity. All right, liquidity pools. And this is your job as a trader to understand where the liquidity pools lie and which environment you're in, and you will trade accordingly, right? So this is why I'm explaining to you what's happening with the market and how traders are looking at this market, okay? So now, when this candle was running, it was at some point super bearish. It took out all the lows, new lows. This was a fake out. Yeah, we're going to get a runner. But people who listen to this podcast, webinar, whatever the fuck this is, knew that it's not only technicals. This is where technicals fail. Just if you simply rely on technicals, you're handicapping yourself tremendously. And before all of this happened, I literally explained to you why that yesterday is going to be a range day, it's going to be a choppy day, and it's not going to be a running day, right? So people who did not understand that, what happened to them? They all just lost money. Okay, why? Well, like I said, so first when we were here, they thought, okay, we're gonna get a bullish run. Nope, their stop losses were here. They get stopped out. Okay, then this candle was looking like this, bearish. So okay, all right, now they're revenge trading. All right, if it didn't go up, then it's bound to go down. Yeah, logical. Yeah, sure. All right, and then what happens when this is the breakout? Let's sell here. They're foaming it in on the sell now, okay? And then what happens? This is where the stop losses are, obviously, the day's high. And then what happens? The minute we pop those stops, what happens to the price action? It reverses back into the trading range. Why did it reverse? Well, because the market makers, the big dog players, and the smart money They just they grab liquidity from both sides of the equation. The minute they took the stop losses, right? And again, it's not your $100 stop loss they're talking about. We're talking about professional traders who are still dumb as shit, but just managing a lot more money. All right. So they got stopped out, and the minute they got stopped out, oops, what the fuck? The minute they got stopped out, the fuck was that? Wait, 15 minutes. Yeah. So the minute they got stopped out, the market went down because people who pushed this price up just said, okay, I had enough. This is not a trending day, and I'm going to take profit. So they took profit, and then they just settled in the middle of the range. All right. And all because I've explained to you why fundamentals matter. And if you didn't catch that lesson, watch that shit yesterday. It's important. Yesterday was probably one of the best things I could have given you in a long while. All right. So I literally called the future for you, explained to you how professionals look at the market and how when to trade and when not to trade. Yesterday I was not trading. For that reason, because I'm not interested in this chop fest. I want to catch these moves, not when this is a consolidation, compression. And again, where are you on the calendar? You're at the end of August. What happens at the end of August? Everybody's on vacation, you know, all the big players. So what do you think? Is you're gonna get wild moves unless again, if war in Ukraine stops or some global huge macro shift happens, then yeah, sure. There will be some catalyst, some movement, etc., etc. But yesterday we didn't even have one fundamental news on the calendar, and so there was simply no catalyst for the price to get out of equilibrium. It just some morons were selling. If the price of Mercedes is $100,000, some people were buying them at 110. Some people were selling them at 90, but the majority of crowd was right smack in the middle. That's why you get this oscillation, all right, around the fair value, okay, and this was the fair value, right, 50%. This was the discount, this was the premium, and that was it. If you're a range trader, this was a fantastic day. I'm not a range trader. I don't like ranges. I like easy money. I like when shit trends nicely. It's easy, headache free. You take it and it moves fast in your direction, and I'm done by 11 a.m. Each morning. I'm pretty much done. Then I always keep my eyes on the market, but I don't have to be glued to the computer anymore, right? So from 7 a.m. to 11 a.m. is my schedule when I trade New York time. When I was your age, I would trade 3 a.m. till 11 a.m. 3 a.m. is because that's when London opens in New York time zone, and that's when I was living in New York still. So that was my schedule back then, right? So then I would come to the office by 7, trade there, right? But the point being is now I don't have to do that. I can just trade the opening of U.S. session, and I'm okay. All right, I'm making money. So, but it took me 20 years of being in the markets to get to this point. So when you see those video YouTubes saying you can trade 1 hour a day, yes, you can trade 1 hour a day, and yes, a lot of professionals don't trade more than 1 to 2, 3 hours. They obviously always keep an eye on the markets, but they don't trade, right? So it's true, but what they forget to mention is either they're lying, and or they've spent 20 years in the market, or 10 years, or at least 5. If you see a YouTuber who has been trading less than 5 years and he's teaching you about trading, run away. If he's 18 years old and teaching you something about trading, you're listening to the wrong dude. Think about, would you want to have an open heart surgery from a 21-year-old kid? Would you? Would you let him operate on your mom? No, you wouldn't, right? It would be asinine to have a fucking 20-year-old operate on an open heart surgery or brain surgery on yourself or on your loved ones. I wouldn't even let him touch my fucking cat. You know what I mean? I wouldn't let him touch anything. So why the fuck are you entrusting these people with your money and your attention and anything else? Use your fucking brains. You simply do not have enough experience in the markets in order for you to become a teacher in the markets after 1 year of trading. After 1 year of trading, you're no dick from fuck. Still. Not enough to teach. You can be maybe slightly profitable. Maybe a little bit of profitable. But you simply didn't have enough trigger time in order for you to shoot well. All right? So when you absorb all that information from people who who have squeaky voices because their balls haven't dropped yet, that's on you. That's your mistake. And I'm honestly surprised by the amount of content that is being consumed by young people from really, really young people themselves, and thinking, okay, this guy knows something. That motherfucker is the same age as you. What the fuck? If you don't know shit, he doesn't know shit either. Because you both just finished high school. What the fuck do you know about trading? Right? Again, but that's, I'm not here to, you want to make your mistakes, you want to put your hand on a hot stove and keep it there, fucking do it. I don't give a shit. So your life is a very, like I said, always say, life is a teacher, cruel teacher. They'll beat the fuck out of you until you understand not to do something. It will cause it little by little, you're straight. It will put more and more pressure on you until you crumble. And then you're like, that's when you hit the rock bottom and you start doing the right stuff. As in trading world, this usually happens when you blow an account or 2 or 5 or 10, right? After 10th account, you're like, fuck, maybe I shouldn't do this shit anymore, right? Maybe I should use the stop loss, etc., 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 right? Because now you're tired of going back to the drawing board and restarting all over again. And it's a necessary process to go through. This is how we learn, all right? I'm going to take some questions later, but yeah, you can type. I guess I'll read them up. All right. So, but if you want me to look at any specific chart, we can take a look at any chart you want. All right. So let's see what's happening. First of all, again, how do you what do you do? First of all, every day, in the beginning of every day, you should know what kind of news are coming out and when they're coming out. So you're not in the trade and the CPI news is about to hit in 10 minutes while you're opening trade that you're thinking it's going to go up, and then a news event comes out and it just does wreaks havoc on your trade, right? So you always need to start with the calendar. And again, there's no major news again, so I don't think today we might get a runner because it's already Tuesday, so we might sell off a little bit. But one second. But more likely than not, we still might be at the end of the summer, which is the 2 slowest weeks of the year. Well, like I said, maybe for Christmas and other stuff. This is probably going to be slow again. So do not commit large amounts of capital. Look at gold, for example. What the fuck? We were first doing the ending diagonal here. Right? So chop fast nonsense. Now we're doing the same shit in reverse. So I want to see this, essentially. That will be my gold trade. And we haven't done anything but since the last 2 weeks. This is what we've been doing. Slowly drifting lower with a lot of chop fast. Thinking, okay, it's gonna run. No, it's not gonna run. It's gonna run. It's just like a cock tease, you know what I mean? It's gonna happen. Maybe now, maybe now, maybe now, maybe now. So when you get this type of market, again, with my trading style, I don't like to participate in this type of environments because I don't want to have a headache. And how do I know not to have a headache? Because I did participate in those markets before, and all it did is cause me fucking aggravation and heartache, right? So it's easier It's a lot smarter to know when not to trade and not to be exposed to risk unnecessarily when you don't have a statistical edge, right? And nobody has edge all the time. So if we take that, then we need to understand that all systems perform their optimal environments for each trading system, because there is no system that trades well in the ranging market and then trades well in the trending market. These are two completely opposite systems, because in a trending market, right, when you get this, you don't want to be selling here thinking that it's going to range, right? And this is what the range or sideways consolidation system will do. It sells the tops and buys the bottoms, right? And it works very well when we're in this chop fest. You buy the bottom, buy the chop, but then the price breaks out and you don't have a stop loss, and what happens? And there goes your account, kaput, right? And then cherry on top, the price comes back to your entry point and then it reverses. So, and 80% of the time, 90% of the time, you don't get stepped out. If you were smart enough to enter with a smaller position size, you don't get stepped out and it comes back. But that one time when you do get like a huge macro event shift, you're just gonna get a fucking unstoppable runner. And that's when the trouble begins. This is when, you know, that 1 out of 50, 100 times you can blow your account. This is NVIDIA Corporation. How many people, if you are thinking about, this is the trending fucking market, right? Went from $10 to $160, or first stop was 150, whatever, without much of anything. So, if you're gonna be shorting markets like that, this is why I like the trending markets, because it just keeps on trucking, and it keeps on trucking really fucking fast, right? So this is why I don't like the chop participating in whatever this is, right? The chop fest. This is easy, and I like easy, and I like money. So, you know. Why am I gonna complicate why complicate things? And or Bitcoin, right? How many people, if you like to, how many people thought the 10,000 was the top, 20, 50, whatever? Pick a fucking spot, right? So is it over? Could be, but if the history is of any indication, you should be buying dips here still, right? So again, and how many people try to short it? Okay, this is going to be a ranging market now. We sell here, we buy here, and the market just keeps on. You even got a fake out candle. Look how fake out candle. People who were shorting this market right here, right? You got a pin bar reversal. Sweet fucking mama jamma. Look at this pin bar reversal. Took out the low, and then whammo, and then like I said, and then cherry on top, it came back to the entry, and people were holding, margin call, blah blah blah, liquidation, market makers take profit, the price reverts back to the range, they close out, offset their hedges, and then the market takes off. All right, and this is what you need to do. This is how you look at price action. Price action is the only thing that's just. This is just people thinking. This is their thought patterns in real time, right? Their decision making, rather. And you need to understand how the big boys think in order for you to start making money, because otherwise you're going to be at disadvantage. If you're going to be thinking the way you're thinking, then I will be the one taking your fucking money, right? But at some point, hopefully you will grow tired of it. And this is why you're attending one of these webinars to understand how to stop sucking, right? And the way to stop sucking is simple. You need to start thinking where is the liquidity? And if I was the motherfucker, if I was the big dog, if I was the G, the fucking whatever, big kahuna, the institutional player, blah, 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 whatever, big fat banker, what the fuck would I do to fuck the most, the most, how would I achieve the most amount of money by fucking over, meaning grabbing the liquidity, the most amount of people, right? And once you start thinking that way, you're gonna start. It's a scumbag way of thinking, but that's trading. It's a win. It's not a win-win situation, because if I buy here, somebody sells here, thinking, okay, this is the top. I'm gonna sell it to this fucking retard, right? And I'm thinking, I'm gonna buy because this is gonna keep on running for whatever reason. And at some point, obviously, in some instances, I'm not saying that buying was right or selling was right. I'm just saying at this point right here, at this level, when there was a sale and somebody bought, that means somebody sold to them, and both in their psyche thought they're gonna be winners. Do you understand that? That both were thinking that they're gonna win, and one of them only was a winner, and another one was obviously the loser. And that's what trading is. And that's why I'm so adamant about talking about journaling the fucking things. Because after seeing 20 of these pictures, 50, 100, thousands of these pictures, you're going to stop doing dumb shit. Because you're going to see before and after, before and after. After seeing thousands and thousands, tens of thousands of before and afters, obviously you should be a little quicker. You should be a little fucking quicker than waiting for 10,000 fucking instances, right? So that's why I said 50 to 100. You're going to start spotting different patterns. You're going to spot two patterns. The pattern that you do wrong, because it repeats itself, you see before, after, before, after, before, after, before, after. And you're like, fuck, why am I taking this? I'm not going to take this anymore because it's not fucking working. And then you're also going to spot something that works. You're like, holy shit, I never thought this is going to work, but I should try more of this. And then you keep trying, you do more of good stuff, you do less of bad stuff, and within a year, you adjust your system to the point where you become profitable. Or 6 months, if you're really, really fast and diligent and you have experience maybe in life, whatever. But that's definitely not going to happen month one, in your trading career. Okay, and that's all it is. And then what you do is you take the winning formula, and you just repeat. You're like an algo that takes the same trade over and over and over and over and over again, and then you can add another trade or another trade. And most traders don't have to rely. Like every time I see the stupid fucking videos on YouTube, 17 fucking ways of making money trading markets, 17 setups that always win. What fucking 17 setups, you fucking cocksucking lying motherfucker? What 17 setups? Nobody looks at 17 fucking setups. You look at 2-3 setups, that's it. And if you're going to be looking for 17 setups, that means you have 150 in your bag. Your brain is not going to be trained to spot 150 fucking different variations every single time. And this is why you go from it's a shiny new syndrome, shiny object syndrome problem. Where you're like, oh, I'm chasing, oh no, this is a winning, and this is a winning, and I want all the money in the world. And you end up fucking being a goddamn loser, right? In the market terms, meaning you lose money. That's why, hence the word loser, right? That's why when you see all these fucking 17 ways, it's like these fucking magazines. I know nobody sees magazines. It's like those magazines back in the day, right? 17 ways for women, 17 ways to 100 ways to please your man. What 100 ways to please your fucking suck his balls, blah, I'm sorry to be graphic. Suck his dick, fucking cook him, shut the fuck up. That's it. That's it. There's no 100 ways. There's no need for 100 ways. You just do these basic 3-4 components. I'm sorry for the ladies. For the men, it's the same thing in reverse, right? Just do those 2-3 things. Well, women may be hard to satisfy, so maybe you do a little more. But I'm a guy, I'm talking from my perspective, right? So same thing with trading. You don't need fucking 100 ways to make the trades. You just need 1 or 2 or 3. And they're called bread and butter trades. You take them all the time and you make fucking money. And this is what you train your brain to do, to spot them instantly, spot them instantly, spot them instantly. All right? It's like 17 ways of being a fucking professional sports guy, right? I play football on Wednesday, I play tennis on Friday, I play basketball on Saturday, and then I play baseball, then I play golf, and the fuck are you talking about? And I'm winning in everything, right? I'm MVP in every single fucking discipline. No, that's bullshit. So you do specialized niche type of entries. You have a few of them. I have trending environment. I have mean reversion, meaning when the market is oscillate, which is harder to do. That's why I'm not even teaching you that. I'm teaching you shit that's simple. It works, and that's it for now. When you level up, you can do. I'm teaching you how to drive a car on a highway, not on the street, on the highway, right? You already know how to drive on the street. 10 miles an hour, 20 miles an hour. 30 miles an hour or whatever, 30 kilometers an hour, right? I'm teaching you how to drive 100 miles an hour, 100 kilometers an hour, 150 kilometers an hour, 70 miles an hour on a highway. But you're like, but I want to know how to drift. Listen, you just got your license a month ago. You want to drift cars on a racetrack or drive Formula One cars at the maximum speed at Grand Prix? You're going to crash and burn and die, right? So that's why I'm teaching you how to do easy trades first. And then once you graduate. You do your own you will learn how to do mean reversion trades. But in the beginning, that's why I'm showing you all these trending charts. Stop thinking where the top will be. Stop thinking. That's a stupid, every single time, every single moron was, this is the top. When Bitcoin was $1,000, nobody thought it's going to go to fucking $20,000. Nobody in this fucking world. I mean, yeah, there were some, evangelists that are like, yeah, it's going to go to 10 million. But even they didn't believe what the fuck they were saying. When this shit is happening, there was a lot of people trying this can't be happening. It makes no sense. I'm going to short here, I'm going to short here, I'm going to short here, I'm going to short here. And you missed this whole fucking move because you're trying to short. So why are you pissing against the wind? Don't piss against the wind. Stay the fuck with the wind. Piss with the wind, all right? So, that's exactly the type of markets I like to participate in. And like I said, and every season has its own special little star, right? For the last 2 years, it was gold. Gold has been phenomenal. It's been trending. All you had to do is buy the dips. I traded up and down. But this is the weekly a weekly chart. But it's just easier, okay? So instead of me looking, is it going to be top here? Is it going to be top here? Is it going to be top here? Top here? Top here? You waste your mental bandwidth thinking that a market went up too high. If this is too high, it should reverse. And the market keeps on going. You're like, no, the market is wrong. So you keep your trade, your short that you entered here, you keep it. And no, it's gonna reverse now. It's gonna reverse now. It's gonna reverse now, and the price just keeps on fucking rocking, right? And this is how you blow accounts. So I'm teaching you literally how to stay away from wrong, erroneous mentality, which will lead to you blowing account. And some smart asses will say, but Stan, I shorted gold here last night and I made money. Yeah, okay, fine. I've explained ad nauseum already in previous webinars how you can teach. Just because you have a winning trade doesn't mean it's a good trade. Because you took a shitty trade, you taught your brain how to make money the wrong way, and in a series of 100 trades, 80 of them will be losers. But because your first two were winners in the series of 100, you're gonna keep doing and you're gonna waste fucking mental capacity, waste time, and you sure as shit gonna waste money doing the stupid fucking shit. So trust me, after 20 years, I'm telling you, trade with the trend. All these old adage, proverbs, phrases in trading. Trend is your friend. It is a fucking. They say it for a reason. Every stereotype exists because people observe the same fucking phenomenon, right? Despite whatever political correctness says, but whatever. It's if trading against the trend was easy, there would be a phrase saying trade against the trend, trade against the trend. But it's not. It's trade with the fucking trend. Trade, trend is your friend for a goddamn reason. So, and you are, you have zero experience in this world, and here you are, gonna be. It's equivalent of this. We're all racing in a racetrack in a car, right? And you come in you're a new guy. And what you do is, you put your car backwards, you go like this, and you're gonna, no, this is gonna be faster. Watch me drive backwards on a racetrack. When everybody is driving forward, your car is moving forward, but with the back pointed towards the front, right? Towards the race, right? So you're driving like this. Do you think you're gonna win? No. So that's the dumb shit that you're doing when you piss against the wind. All right. On that note, let's see. Let's take a look. See. Again, it's slow as shit. There's like nothing going on. Just whippy, and this is gonna keep on going. This was the last hurrah from the what was it, NFP? This was the CPI, right? Yeah, last week, right? So the CPI, and now we're just drifting lower because there's nothing, no economic news, no new catalyst is coming into the markets to make a new decision. But the good news is the trend is still, long-term trend is still up, long-term trend. The interesting part is that if we're gonna go, a great trade today would be, this is the ATR, this is the usual, and this is the ATR. This is the typical distance of how in the last 2 weeks the US 30 volatility of US 30. This is its move to the upside. This is its move to the downside from the open, right? So if we're gonna take out the liquidity of these people here, who were the last who joined the party and bought all-time highs, right? Their stop losses are here. So if the liquidity is running to stop them out, and you're gonna see a candle like this around this level today or tomorrow, that's gonna be a good buy. At least short term, it's gonna, because all the people who sold this will start taking profit around once they grab the liquidity from this zone. And this is an A fucking setup. This is a good setup because it makes sense. I'm not ascertaining right now, well, I'm gonna sell, I'm gonna buy, I'm gonna do this. No. See, this is a concrete fucking setup because now I know these people got stepped out. I see the candle is giving me indication that the crowd that drove the price down now is taking profit. This is why you get a candle like this. And we are at the daily maximum range. Obviously, it can keep on going and going and going, but that's why I'm waiting for the candle. So the candle will give me a probability that, okay, the crowd is exhausted, we might have a pullback. And I catch that pullback. Even if markets crash afterwards, I still will catch this pullback. Still make money. Another option is, you see that we are moving in these waves like this, right? So you see that they're pretty much equal size. Maybe getting a little smaller. Another option is what? Wait for this order block to get hit and sell here. But you need to have confirmation. That's another trade for today. What do you do here? Nothing. This is not you don't do anything here. This is a no-go zone for now. It's just a huge fucking red candle prior, and we just opened the market. So this can easily reverse in the next 5 minutes, again and again and again. All right. So these are the scenarios, and you build out these scenarios, and then you see which scenario will play out. All right, and that's it. And if the price confirms your scenario, you enter, because the price is confirming that your thinking is aligned with what market is doing. And if your thinking is not aligned with what market is doing, then don't fucking take the trade. Alrighty. Shit. Let's see. I'll see some questions. Oh fuck. Okay, hey Stan, I was profitable for 2 quarters, so started 100K challenge, but still have problem passing. It's been over a year, I haven't failed, and still on the first attempt. What could be the problem? You're trading with scared money. I think you are most likely than not. You need to go to the drawing board. Leave that fucking account alone. If you have to have activity on that account, you need to whatever. If you need to place a trade, just place. Okay, let's take a step back. Are you journaling? Probably not. If you would be journaling, you would see the problem yourself, right? Because you are taking obviously trades that are not working out, and you need to make adjustments. You either change the system, you tweak the system. You need to develop the system that actually is profitable on a small account. You're under pressure right now because you finally got into a 100K account, and but you have anxiety, and you have that pressure creates anxiety, which throws your brain into your fight or flight mode. So you're thinking with your amygdala instead of your prefrontal cortex. Okay. Meaning you're not thinking straight because of the stress. So in order for you to combat that stress and get rid of that anxiety, performance anxiety, whatever. Again, let's say his question is this. He played basketball in the backyard with boys. All of a sudden we put him in the NBA. It's not a final, but it's one of those championship games, right? And it's all of a sudden you have cameras, click, 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 click. You have people watch, or soccer, or football, or whatever, pick a game, right? And all of a sudden you're like, holy shit, because you're not used to this big environment. So you're probably watching your P&L, you're shitting your pants because you're like, every time you're used to trading a $10,000 account, now you're trading a $100,000 account, and you're still when $200 didn't mean shit, now you're down $2,000. You're like, oh, okay, hold your horses, boy. Right? You're shitting your pants. So in order for you to combat that, you need to go back to the drawing board, and you need to reduce position size. You need to gradually. So I don't recommend jumping from a $10,000 account to a 100K account. You want and that's actually a common problem in the banking world. Most hedge fund traders, the problem is not that they're not profitable. The problem is pushing them to trade more, because everybody has a ceiling after which they can't handle, because the sizes become so big. It's hard. Okay, when you're swinging 50, 100K days like this, that's a lot of fucking pressure. Because if you have a bad streak and you have 5 losers in a row, or 10 losers, or whatever, right? Shit happens. You're down to $1 million, couple of $1 million. Then what? You have to make it back up before you even, nobody's going to pay you shit. Plus, you're going to get fired. Now you're really fucking stressed because you're going to get fired. Right? So, to combat that, you need to reduce position size, and don't watch the P&L. Watch percentages of what you make. Okay? And remove the P&L from your fucking screens. Meaning the actual number. Because when you start trading more and more and more, yeah, if you're an average person, I'm not talking about, you were born in a very wealthy family, and you're an average guy, you see, and 10 grand, 20 grand loss is a substantial amount of money, right? So you start sweating bullets, and you need to, you need to journal your next 50 trades, your next 100 trades, you need to be disciplined about it, because first of all, it's gonna reduce your it will reduce your entries only to because you're forced to journal. You will be forced to be more selective with your trades, so it will reduce the amount of shitty trades that you take. Because once you're going to start putting it in a journal before you take the trade, you're like, or even if you took the trade and then you journal, you're like, okay, I better get out. This doesn't look good. I've seen this before, and this looks awfully like the other 10 times that I took this and it didn't work out. So you immediately stop, and you either get out of the trade or you don't take the trade. And that's why journaling kind of like, it filters out the B minus and lower setups. You can still take A, B setups, whatever. Not every setup is going to be A for you, but you will experiment at least. And lower position size, get to the winning again. For example, everybody goes on the tilt, like in the poker terms, right? Or on the drawdown. When the drawdown happens, what most people do is they double down, they double down, they double down, they double down, and then they blow up. Instead of understanding that for some reason you're just not in the mental state right now, or the market is in a cycle that is you're not in sync with the market. All you got to do is survive. All you got to do is survive. All right? So most professionals, when they get 3 losers in a row, 4 losers in a row, 5 losers in a row, they're having a bad fucking week, a bad 2 weeks, month, whatever. They cut their positions until they start winning again. Once you start winning again, that's when you pop the positions back up, because then you got your groove back on, right? And it's very visible in sports too. If you watch any sport, somebody's on a roll, then something happens, they lose their focus, and they just, nothing works. It's the same fucking guy. He was winning for the whole fucking year, winning, just dominating, crushing everything, and now just shit doesn't click for some reason. All you gotta do is survive, and you'll go back to because nothing is forever, and the bad times too shall end, right? So your job is to survive those bad times and not take it fucking personally with your fucking ego, and start doubling down, tripling down, quadrupling, and blowing your account eventually. So that's my advice. Journal, reduce position size, because you're under way too much stress, and that stress is causing you to a chain reaction from your brain, from your thinking, to deliver your shitty results, as explained prior. How not to chase price, Stan? Very simple. Don't chase the price. You know how you don't chase the price? You chase the price 10 times and put a lot of money behind it. And then when you blow your 5 accounts by chasing, you will stop chasing. All right? That's how you learn. Because we're fucking dumb creatures, and unfortunately, and this is how you learn. All right? Or you can be smart about it and just don't chase to begin with. But you're itching. So if you really want to chase, you're really itching, do it on a different account and do a small position size. If you really have that gambling itch, have a gambling account. Have a fuck it account. You have a normal funded account. You have your normal trading account with your whatever. And then you have this account where whenever you feel that emotional itch and you have to scratch it, you have a special account for that. And you're like, okay, I really have to know. I have to know. You know? You have to know whether or not this trade would have went out, because you don't have patience. You will know if the trade works out. You just have to wait, a day or whatever, and you'll see if it worked out or not. But if you really have to scratch that itch, have a fuck around account. Put $100 in it. Put $1,000 in it, and fuck with it, and you'll see. What to do in drawdown phases of trading, Stan? I think my edge will be bad at some times. Yes. Okay. So same. The drawdown phases, like I've explained. Cut your position sizes. and wait and ride it out. So I thought, see, we're gonna hit this order block, or we hit this order block right here, as you can see, almost. I thought we're gonna we did the pump, but didn't survive. So well, it's still 9:45, so maybe at 10 we'll turn around. But like I said, this is going to be interesting to see when this liquidity gets grabbed, and if we form some kind of turnaround candle, I'd be interested maybe in doing that, catching the, it's either going to be a pullback or it's going to be a runner. It doesn't matter, because I'm gonna put my stops at break even, and take a half off at relatively fast, because you don't know if this is beginning of the slump or not, etc., etc., etc. All right, so this is so when you're in the drawdown, cut your position size in half, quarter, and just keep on, because then you remove the pressure from you. The reason why everybody is a goddamn trading god on demo is because you have zero pressure, and that's what you need to feel. You're never gonna feel like on a demo, but this is as close you can get to feeling pressureless. And the way to you feel pressureless is when you don't trade too big, because when you're eyeballing the fucking P&L and it's minus $5,000, and that's money to you, then you're like, fuck, this is my monthly salary right there, or whatever, right? And you're shitting bricks. So that's not you. You're already immediately your thinking goes out the window. You start panicking, and you're in the emotional mode. Once you're in this emotional mode, you're not trading. You're done. All right. So then how do you deal with greed in the market? How do you stay enough is enough in terms of profit? So there's no enough is a profit or greed in the markets. I basically know I don't like to stay in the markets for too long, because the longer you stay in the market, the longer you have risk exposure. Anybody can come out, any big influential person can come out, say something, and the market does something else. So the faster you take your fucking money off the table, the better, to me, right? Because the less you are in the market, the better it is. The less chances some stupid shit is gonna happen, and you're gonna be whipped out of your trade or give up all your profits, etc., etc., etc. So to satisfy my greed, what I do is this: I always take half off at a certain point. If it's 1-to-1 or we're like at 65% of a trade, I take a little off the table. And then the other half I let it run. With you can to a major level, or then I can scale it down a little more, or I can take a full profit or let it run, and I just trail the stop loss behind 2 or 1 swing of swings. Okay, this is how you catch those huge runners. But to satisfy the greed, you always take half off. This way you filled your belly with something. You don't have to do half off. You can do 1/3 off or whatever. But that's what I do. I found that taking half off, putting stops at break even, completely de-stresses me and lets me ride that trade. And then it doesn't matter what happens to the trade. Okay, and then I immediately free up my mental bandwidth to attack other trades. What word describes the mindset of staying emotionally neutral, not getting too excited during wins or too discouraged during losses? So what one word describes the mindset of staying emotionally neutral, not getting too it? Again, it's just reps. It's like going to the gym. You have to do reps, and every rep is you do a good job at it, but you don't need to get excited. And your job is not to think, okay, is this going to go up or this is going to go down? All you're doing is you have 2 or 3 setups that make you money, that you've distilled from 2 years of sucking and crying and pain that you endure in the markets. You distill those 1 or 2 or 3 or whatever trading types, and then you just repeat themselves, and it becomes just, you just take it and you leave it. Obviously, you still get those feelings, but you don't act on those emotions and feelings, right? It's like, again, you don't sleep with every hot woman that passes by. Oh my God, she's hot. Okay, I'm gonna fuck her, and I'm gonna fuck her. I'm gonna fuck her. I'm gonna fuck her, right? And you have a girlfriend next to you, right? You still have thoughts. Somebody's hot, right? This girl's beautiful, or this guy's beautiful, whatever the fuck. Swing your boat, right? That's it. But you you don't just jump on them like a fucking ape, right? So same thing in trading. You just stay cool after it. Just again, it's trigger time, reps in the field, and that's it. All right. Oh shit. All right. Last one. Stan, are you bald? You're always wearing hat. No, look at my older videos. I'm wearing hat because it has the logo. Jesus Christ. What you should do when your best setup happens and you're asleep, or after you gotta be asleep if you can imagine. Okay, so a person is asking, what do you do when you miss a good setup, and how do you manage it? Or if you anyway, it's okay. You have to sleep. Like I said, when I was young, I would obviously dedicate a lot more time to the markets, but the setups occur all the time, and that's what most of you don't understand. The beautiful trade will happen again. It's like crying over. Okay, you're walking on the street. There's a hot girl walking by. She passed you by. You smiled at her, or you didn't smile at her, and she ignored you and she walked by, and you're like, oh my God, start crying. Why? You keep walking. There will be more beautiful women or beautiful men or whatever, beautiful people on the street. You don't have to just because one walked by doesn't mean that's the end. Same thing with trading. If I sleep, yeah, obviously I say, oh shit, this was a nice setup. Okay, fine, missed it. But at my age, I don't need to. I have enough setups occurring for me to trade at from 7 to 11 a.m. pretty much. But when from my 20s to my mid 30s, I was trading 3 a.m. to 11 a.m. pretty much. So I would trade London open to London close. That overlap is the highest liquidity, highest volume. So London open, U.S. open, London close, and U.S. lunch hour break, right? Up to that break, that's when I was most active. All right, boys and girls. The questions that I haven't save your questions for the tomorrow. I have other stuff going on, so tomorrow I won't be able to do the webinar, but I'll be back hopefully Thursday. Maybe we'll have to start a little later on Thursday, maybe 9:30ish, because I have to do a few things in the morning. All right, so tomorrow no webinar. Save your questions, those questions that you haven't been answered, save them, just copy paste them in the next live. I'll try to address them. We did our like I've explained with the NASDAQ, that's the easy one. Gold is just it's nonsense. It's total nonsense for now. The good news is after this nonsense comes a trending move. Okay, so you will have an explosive move coming probably hopefully at the end of August, the beginning of September. You're gonna start markets will start moving again. All right, so I'll see you all Thursday. Thank you for coming. I really appreciate it, and check us out at Funding. What is this? I don't even know which hat is this. FundingTraders.com and FundingFutures.com. All right, ladies and gentlemen, thank you so much. Love you all. Thank you. I'll see you soon.